All right, everyone. Thank you for joining us for another episode of the Des Moines Metro Market Update from Team IRG. My name is Junior Ibarra. I'm the team leader for Team IRG, and we also have alongside us.
Ryan Coy, I'm the Director of Operations for Team IRG, as well as.
Anthony Simon, I am one of the local agents here in the Metro. So we're just going to dive right into this. So median sale price, again, Des Moines is very seasonal. And one caveat again, just to start this off, this is looking at the Metro core. So kind of Des Moines and the surrounding suburbs that kind of make up what everybody thinks of as the Metro. And this is also looking at just single family housing. So median sale price, again, seasonally, we've fallen off a little bit down to 300,000. Not really a surprise there coming into the winter. And we don't have the number at the top there, but it's looking like this year, 2023, will be about 3% higher in total for median price than last year. So we're still seeing growth here in Des Moines as far as pricing goes. It's just more in line with how we'd like to see it in that kind of 3 to 4% range.
Yeah, definitely. And again, real estate is all hyper local, right? You see all the media saying the market is crashing and this and that, rates are killing the real estate market. And although that may be true in some markets, we always just look at the Des Moines Metro. And here, as you're saying right there, we still saw, even though interest rates literally went from 2.5% beginning of last year to 8.5 at peaks in the moment, peaks of and during the peak this year at the highest level of interest rate, we're blessed that we're in Des Moines with the fact that people want to live here, they want to raise their families here, and we're just insulated from all the craziness of the up and down cycles in other parts of the country. And so yes, it's good that we don't have 15% year over year increases, and it's also good that our market isn't crashing and we have a more stable year over year increase of 3%. And based on what we're seeing and going into next year, as long as things continue to go the way they're going, is we'll probably see another 3 to 5% increase going into 2024 is what the indicators are showing. Yet no indicators are showing anything about market or prices falling 10% or 15% or anything like that. At least not here in Des Moines, Iowa.
And look how smooth 2023 is. I don't know if you guys noticed that, but the graph for 2023 is way smoother than all the other years. I don't know exactly what's going on there, but as far as your point, Junior, as far as the prices dropping, I feel like we're stabilizing here.
Yeah, absolutely.
Days on market. So right now, kind of October, November, we were at 11 days. So still under 2 weeks. It might feel like an eternity if you're a seller, but it's still way less than what is quote unquote typical. I don't think we're going to see 90 days in February, especially if rates keep dropping. This will likely start coming down a little bit now that we're through Christmas. Once we get through New Year's, things tend to start picking back up in Des Moines around that March timeframe, February, March, as you see days on market fall way off then. And we're not very high. So we're not starting at a high point to fall to. So I expect this summer to be very likely another very short days on market coming into the spring.
Yeah, we're already seeing an uptick in activity because rates have been obviously very volatile this whole year. And right now they've dropped a lot, right? Going into the new year. Whether they'll stay that way, I don't know. Everyone's saying they will be. And now we're seeing rates in the sixes and even some below the six. And so we're seeing a huge uptick in activity going into the new year. And so we'll see. But typically you'll see that drop come February after the coldest days of the year here in Des Moines, Iowa, right?
We're getting close. Yep.
Yep. So let's go, Des Moines. We can do this. We've done it for years. We'll do it again, right? Power through the winter. For a little while there, people hibernate. Yet still, houses are obviously selling. We're not talking a lot of days there. We started even at 30 days. Houses still selling in under a month during January. So still a seller's market overall, right? Yet it shows that going into next year, we'll dip again, probably below 10 days if things are going the way they're going, because we still need inventory out there in order to get back up to traditional levels where houses. Yet there is this component of some sellers still thinking, hey, I'm going to price it really high. Pricing strategically is still very important because we have seen a lot of that too. Pricing strategically is still the best way to market the house. And that's where leveraging real estate professionals who do this on a day in, day out basis is a great value add to people considering on the selling side.
Yeah, because again, this is a month behind. This is almost 2 months behind now because we're at the end of December. These numbers and rates have done a lot of moving since the beginning of November. And yeah, things are always changing. Obviously, we can't post numbers real time just because they're going to be out of date so quick. But the agents on our team are definitely in tune with what is happening. And we have so many agents to bounce. What are we seeing day in, day out on our listings with our buyers and just in general out there? So we have a lot of data points to track this in real time because everything we're looking at now is delayed right here.
Mhm.
So number of houses sold. So looking at 2023, we're at just shy of 7,000 houses closing out November, which is about 80% of last year's number. So that this 80% number has been tracking pretty consistently through 2023. We're likely going to end 2020. We're likely going to end this year about 20% of the volume of number of houses sold as last year. The one kind of nice thing is that the slope of this line, so the rate of change of this is slightly less than what we've been seeing the last couple of years. So things aren't slowing down quite as much this season as we normally see it. There's just less happening.
Yeah, and for sure, it'd be nice to see what December numbers are, especially with we saw that 1% rate drop, right? Be interesting to see if we see a little bit of, like you say, it's not as severe. Maybe we'll even flatten out even into December.
Yeah, and obviously you see yellow and gray there, 2020 and 2021, hitting those above average for our market units closed, which have a correlation with the lowest interest rates in the history of the United States, right? And so now we're going back to more normal trends, even though still below 20% lower than last year. We predict, my professional opinion is that you'll see an uptick going into 2024 as long as these rates actually hold stable. That's what I would like to see, is not necessarily like the changing, and keep them stable, right? Let's just focus on consistency. Yet obviously I have no control of that whatsoever. So we'll see what the market brings. Yet I'm glad to say, and I'm proud to say, that our team is not down 20% units closed. I think we'll end the year between 5 and 8% as far as units closed compared to last year, which means we're beating the market anywhere from 15 to 15 plus percent. And that's because we, again, are very focused on making sure we're providing value to our clients and our community, which is why we also do this video. And so thank you to all of those that continue to reach out to us to help them with all of their real estate needs. We thank you so much for that.
So this is looking at those for just November, number of houses sold per price point. So again, 80% of the houses in Des Moines, single family houses in Des Moines, have been selling at 450 or less. I think the exact percentage was like 81.5% for these numbers. But again, with median price being right around 300,000, it's no surprise that kind of right in that 300 range is where we're seeing the bulk of stuff happening. That's just what it is. I know we were chatting right before this that we're seeing a lot of new construction lower their price points, maybe not quite building quite as big of houses to get in that 3 to 350 range, because obviously that's what people are buying. That's what's affordable for most people right now with interest rates and everything going on.
Yeah, I was even telling Anthony and Ryan here how I live closer to some new developments over near Pleasant Hill, Altoona area, Bondurant, that kind of stuff. And we're starting to, it's interesting to see as the developments go into phase two, how they're just essentially aiming to get below 300,000. And in today's market, with the increased interest rates, the increased cost of construction, and all of those things, the increase in essentially everything in the economic cycle, they're essentially trying to put more units on less land, right? So higher density in order to get into those affordable price points below 300. So we are seeing it. So the builders are evolving to the new market and the economic factors that play into building houses. And so we're starting to see houses on smaller lots, right? We're starting to see townhomes. We're starting to see what they call twin homes or bi-attached homes in order to still get the 3-bedroom, 2-bath house that everybody wants. May not have that third car garage anymore necessarily, or it may, yet it'll just be a twin home or a townhome. So more units on less land is what we're starting to see in order to hit those price points and that affordability factor for first-time home buyers or that entry, that secondary home from the starter home or whatnot.
So number of new listings. So this is where we're starting to see a little bit more of a change. So this is new listings hitting the market. We are definitely not seeing the same fall off rate we normally see this time of year. Normally kind of listings just really slow down again, kind of November into December. And we're just not really seeing that as much this year. A lot of it, again, could be interest rate related. They've been sliding down a little bit since November and really took a bit of a dip in December. So people who've been waiting on the sidelines are finally getting out there saying, let's list our house, let's make this move, either downsizing, upsizing, whatever, or relocating. Again, still lots of relocations happening in Des Moines. But we're seeing this and it is going to affect our inventory, which in a positive way.
Yeah, absolutely. And some of it also is weather related. We haven't really had that big snowstorm hit Des Moines quite yet. We'll see what happens going into the new year. So that has helped a lot. I also, as we talk to a lot of clients on a day in and day out basis too, as some of these interest rates have hit these lower sixes and even high fives, it's the gap between what they have and what it is now isn't as big when it was like, so you like, what was the statistic? Like over 90% of people that owned a home in the market we're in had a 4% or lower interest rate, right? If you have a 4%, jumping from a 4 to 8.5, that's a
That
huge jump.
hurts a little bit. Yeah.
4 to a 5.9 or a 6, not as big of a jump, and life is still happening. Families are growing, so there's that pent up consumer demand to get into that bigger home, or downsizing too, right? And now it's becoming more feasible. So that's what we're starting to see as far as the conversation. And what's awesome too is everybody has a lot of equity. Like every house that we're walking into, they have lots of equity. So there's a lot of great conversations as to what to do with that equity when that sale does happen. Is it best to put it all as a down payment? Is it best to consolidate, to pay off a lot of debt? Because sometimes paying off a lot of debt and crunching that debt out cash flow to zero, so you pay off all the debt, is better than putting more on a down payment on a house, right? Cash flow positive conversation as to making some of those decisions, which is why we involve our real estate partners, such as our lender partners, that we want to empower everyone with so much information so that they can make informative decisions on what to do with equity, or what to do if you're looking to downsize, or what to do if you're looking to upsize, or what to do when you're looking at investing or building, so that you have all of the financial information you need to make an educated decision, right? Is ultimately our goal and how we like to approach things on our team. So that's what we're seeing on the day to day in these conversations when we're sitting in the kitchen table or the living room talking to our consumers and our clients.
Yeah, positive effect. We are, again, just slowly, month after month, inventory is creeping back up. We are still nowhere near what it was the norm, kind of pre-COVID or pre-craziness, but we are slowly ticking up. I know if you do follow our videos, October was the first month that resale homes this year there was more resale homes listed than the new construction. It has gone back. New construction ended up, they must have just thrown out a ton more houses here recently. Both numbers did increase, but new construction just increased more. But the overall positive is that active listings are going up. That usually tends to slow days on market down just a little bit, giving buyers a little bit more time to get in there, and just gives everybody more options when they are looking to purchase.
Yeah, absolutely. And I think we're going to continue to see that. And one of those things, again, where I mentioned earlier how more units on less land, you're starting to see the townhome concept, the twin home, the buy attached. So when you're listing multiple properties, that increases the inventory as well. We're even seeing on infill lots. I was driving by quite a few infill lots where, in the Des Moines core, where they offer the 6-year tax abatement, to where now, where they used to knock down an older home and build maybe, I've seen multiple times where they're building 3 houses on those lots, on some of those bigger lots in the infill area. So in order to get now, I've seen some of those priced homes be at 250 for new construction, which is actually amazing because we're seeing a lot of 2-3 bedroom houses that are resale built in 1940 to 1980 hit those 2 to 250 price points. So now as builders are evolving and building on less land, they can even hit the 250 to 275 price point for a new construction house with a 6-year tax abatement and still get a 3-bed 2-bath. I think on some of those I saw 1-car garages. So again, things are changing, things are evolving. Whatever fits our clients' needs is what we're going to show. Yet we're starting to see that happening in our local market, which is very normal in most other markets. It just hits us 5 to 10 years later, and we're hitting that stride now. So it's interesting to see how this is going to shape out going into 2024. But all indicators show a solid market overall. And again, if you have any questions whatsoever, we're here to help.
Yeah, and that's all we've got this month. So, as always, reach out. We're on Facebook. Check us out on Google. There's our phone number. We've got 24-hour answering service. Somebody will pick up if you call. And we're always here to help talk through these numbers. Again, everything's hyper local. All these numbers are looking at the metro core as a whole. But again, everything is more localized than that. If you live in Ankeny, that's not going to be the same as Southside Des Moines. That's not going to be the same as Urbandale. Each region of Des Moines has its own slight variations on all this stuff. And that's where having a real estate or a trusted real estate advisor in your corner can be super beneficial.
Yeah, absolutely. We're here to serve. And one of the new things that we have been getting requests from our past clients, yet we offer this to anyone. And again, you'll see this video on YouTube or Facebook and whatnot. Yet we offer what we call a pair report. So a professional equity assessment report to anyone who would find value in that, to show you exactly how much equity you have in your home at no cost to you. And we'll do that. We do it for our clients once a year, where we actually go into their houses and see what kind of updates they've done. If they're considering finishing the basement or adding a deck, or how that's going to affect their overall value. And we do that for our client base. Yet we're putting it out there to the whole world that if you would want one of these, to get a real estate professional in your house to ask those questions and provide that value, that we would do it at no cost to you, and we would leave you that full report for you to have those discussions with your significant other or whomever you need to, your financial advisor or your CPA, so that you have that information to use that equity however you want it. Finish that basement, buy an investment property with, or whatever it is that you want to do, consolidate some debt. So again, offering that, let us know, reach out to us on that phone number or on our website. And again, thank you everyone for giving us the opportunity to provide education through these videos. We have a lot of fun with it.
Awesome. Happy New Year, everyone.
Oh, yes. Happy New Year. We'll finish it at that. All right. Thank you, everyone. We'll see you on the next one. Let's go.